Okay, well, let's get more on this now, because joining us is Bundeep Singh Rangar of IndusView. Bundeep, good to see you. Welcome to BBC World News. So our budget with a focus to return growth to 9%, I think around 2012 or at the earliest, they say. Given the current global economic picture, I mean, is that realistic or is it a little overambitious, do you think?
I guess it's a bit of both. If you look at the budget here, it's got a lot of emphasis on a very inclusive growth policy. So India's economy is 70% agricultural based, and they're targeting to sustain a 4% growth level there, which is ambitious because that's a huge, slow part of the economy, but it's also the part of the economy that got them to power. So it's kind of a thank you to them, if you may. The other part, of course, is infrastructure. And if you've ever been in India, the infrastructure there is terrible. And experts say that India loses about 2% of its GDP growth a year because of bad infrastructure. So if you look at it from that perspective, there is an impetus here to provide spurs for growth. Not necessarily the kind the market was expecting, though. The market was expecting divestments, some increased policies on foreign direct investments, some more liberalization. That did not happen. And I think that's where the markets reacted negatively. Some might say, and I might add, overreacted negatively.
Right, sure. And we'll touch on that in a minute. But of course, we talk about the infrastructure spend. I mean, to get back to this growth of 9%, big plans of spending. Part of that spending, of course, focused on the farming and the rural poor. Is this a budget that will help India's poor?
It will, because you've seen them, they had this big program for a farm waiver program, a loan waiver program, and they've changed that slightly to say you can repay that and get lower interest rates. There's a whole policy here to encourage growth at the grassroots level, which I think past governments have failed at and therefore been booted out of power. So, and also the finance minister, if you know, has somewhat of a left-leaning background. So for him, appeasing the masses, getting some more infrastructure is more important possibly than appeasing Western FDI interests, if you may. Now, India's economy was growing at 6.7% last year. That's a pretty big jump of 2.3% at the time when the world is still suffering from a world recession. So it is ambitious, achievable, but you know what, very interestingly in the budget, it did not say what that time frame was for achieving 9%. It just said long-term 9%. Yeah. And that's, in the eyes of the beholder.
Or at the earliest, of course. And very briefly, you touched on it. Look, investors certainly not that happy or over the moon with this budget. The market, the Sensex was down just over 6% the last time I looked. They wanted to see sweeping reforms and pro-market measures, didn't they?
Absolutely. And this budget now takes India's deficit down to current deficit up to 6.8% of GDP, which is comparable to 2.7% before. And that's going to affect things like investor ratings, currency rates, et cetera, to the negative. So I think unless India can rein that in, there's likelihood that all the other good stuff they're doing on infrastructure is tempered off by the fact that foreign investment doesn't come in, and you can't create wealth unless you get injection of capital.
Absolutely. That is a tough call in there. Bundeep Singh Rangar from IndusView. Thanks very much for joining us. Great
You're
stuff.
Welcome. Thanks.